This is your Wall Street wake-up call. Alibaba and Tesla are out with quarterly results. For more analysis, let's bring in Brenda Kelly, the head analyst at London Capital Group. So Brenda, first to Alibaba, fourth quarter revenue rising 39% to 24.2 billion yuan. That's ahead of estimates. Also, active annual buyers rose 21% this year over year to 423 million. So you look at the quarter and you can't help but think maybe things aren't so bad in China's economy.
That's exactly what everyone is really thinking. Certainly most would be considerably downbeat on the Chinese economy and anyone who has any significant exposure to that particular country. But certainly Alibaba seems to have bucked the trend and ultimately has beaten expectations across the board. And the last time I looked, we see the shares up there in the pre-market at 4.9%. But they were down 4.7% over the past year. And again, that was down to concerns that China's slowing economy was going to impact.
Let's move on to Tesla. Its losses widened amid production issues, but Tesla CEO Elon Musk says the company will produce 500,000 cars by 2018. Now this year it expects to produce 90,000, and yet Wall Street believes him. The stock is up.
Yeah, well, the stock is up because I suppose that even though this is probably the 12th straight quarterly loss in a row, it was better than what was expected. I think we were penciling in around a 320 million loss for the Q1 on the consensus basis. So anything better than expected these days does lead to something of a surge in the stock price. But clearly it is down to the fact that he has done exceptionally well in terms of getting new orders for the new model. What is a problem is getting the manufacturing done in time. And while he's making a lot of promises to get a lot of cars out by 2018 as opposed to 2020 as was initially slated, you do have to question whether he can do it. A lot of these particular parts are obviously unique and are quite difficult to get together. So I think it will all depend on how quickly he can satisfy the customer demand and deliver with the actual goods.
It's probably better for Elon Musk to under-promise and over-deliver instead of the other way around. But Tesla is a small auto company compared to the Fords of the world. But do you think it's valued as if it were a big auto company? I mean, what's your take on the stock? Would you want to own it at this point?
I like the stock. I think he has, to buy into Tesla is probably not a bad thing at all. And certainly, expectations are quite high. I think you can't obviously discount the fact that with very little advertising or marketing whatsoever, he's managed to, get away 325,000 orders just over the last number of months. And I think that is something that you have to watch carefully and look at it with some level of appreciation. So, given that the share price is up around $75 per share thereabouts and up in the pre-market, I would pencil in a certain amount of upside between now and then, and certainly given the fact that electric cars are probably starting to become a little bit more mainstream come the summer driving season, we could see a little bit more uplift in the orders there as well.
All right, Brenda Kelly, the head analyst at London Capital Group. Brenda, thanks so much. I'm Scott Gam, and you're watching The Street.